stretch. Get ready for this workout I'm about to get you. You need to do some stretching before you watch this video. What's up? My name is Noble Woods. I am an educator, full-time trader, swing trader, day trader, futures, options, stock, crypto. Got a position in some crypto. Yeah. So I wanted to do this video to help because right now what's happening is there's a lot of talk about the impending and inevitable correction that is coming. A correction is basically defined as roughly a 20% pullback from the highs. Think about the S&P Nasdaq broad market. It's a pullback. These things happen. They're cyclical. How do you navigate them, though? That's the question. So I'm going to hop over to my chart. I want to do a really detailed, really good, once again, a really good workout for you for free here on my channel to help you to better see and better anticipate what can happen, what may happen. And if we literally got a repeat of last year, how would you navigate it? A lot of people got hurt. I know a lot of people didn't make no money last September and October. Those accounts came down, right? Those 5 months before were cruising. Every month was higher the 5 months before September. September and October are generally, October's like the historical data just shows it's the toughest month of the year. The gains are the lowest. Usually it's the tough time. It's the month that shows you who you are as a trader. Yeah, shows you who you are as a trader. I'm in a group that I help to manage on Facebook. It's called Insider Trading, about 18,000 people in it. People love posting receipts, just saying, hey, I made money on this, on that, it's all through the day. People are sharing, what they trade and yada, yada. It's a great community. But last September and October, it got quiet. It got quiet. Because people were losing. Because out of the 18,000 people in our room, I think before COVID, it was maybe like 6,000. So the room tripled, which is a great thing. That means people are coming into the market. You're here because you want to learn. Awesome. Kudos. Proud of you, regardless of who you are, how much money you got, race, color, creed, none of that matters. You're here to learn. You got to learn something to be able to do some damage in this market. And a lot of people lost money last September and October. And I think generally speaking, most new traders really don't know how to manage when that month chart starts dipping. I said the month, not the day of the week. When the month chart starts coming down, yeah, take some different skills. So we're going to start with the S&P. I'm going to flip over to my charts. You're going to love this. You're going to love this. You're going to love this. It's simple stuff, but it's foundational. It's so foundational. So let's dive in. I'm going to start with the S&P. I'm on the minute chart. Why would I start on the minute chart? Does it make sense to start on the minute chart? Of course it doesn't. Of course it doesn't. Let me back out to the 4 hour. Do we start talking about a correction from a 4 hour perspective? Nope, not at all. Day chart? Nah, that's too small too. Week still won't help us. We need the month. So first thing I want to point out really quick is this. If we talk about trend lines, then across the good old S&P, actually, let's be like real technical. We had this uptrend. That was 95, 96, 97. I graduated high school, 98, 99, right? We had a bubble bursting all the way down to 03. All right. We had, this is essentially right here. This is the recession came all the way back down to these same lows from 02. Went a little bit lower. And virtually since this bottom at 09, we have been in an amazingly strong bullish market. You look at COVID, which bounced off that same trend line. Drawing the trend line across COVID, oh my goodness, look at that. It's virtually going straight up. It's virtually going straight up. So I want you to be very clear for those who are watching this video, of course, because you just want to get more insight about corrections and kind of how to navigate a tough September or October, which generally speaking is the toughest, months, toughest time of the year. I also want you to be very clear that you are living in right now. We are experiencing the steepest uptrend that the S&P, that Nasdaq has seen probably ever, but definitely within the last 20 years, hands down. Easy to say that. Easy to prove that. You're looking at the chart. And this is going back to 93. So that's what? 93, 7 and 21, 28 years. Steepest uptrend, best bullish, most most amazing bullish market of the last roughly 30 years. You're living through it. So let's do this. To really kind of understand what's happening though, or what can happen, I need I'm gonna flip over to my normal indicators. Let me do that for a second now. Matter of fact, and I'm gonna take this bottom one off. Keep it real clean and simple. Really, really. Matter of fact, let me take a little bit more off. We don't even need all of this. All we need, this yellow line is a 21 period exponential moving average. 21 exponential moving average. 21. You could use a 20. For the last 10 years, I've used a 20. And then last year I tweaked things very slowly. I changed to a 21 exponential moving average. I just like it a little bit better, slightly. And I'm gonna show you why it works really, really well. I'm gonna show you why. So people are thinking about. Oh, last thing. I got an indicator that I love on here. It's called a Ttm Trend, Trade the Market Trend. You can use it specifically through Thinkorswim, which is the platform I'm on right now. It's licensed for free through Thinkorswim. An amazing. It's such an amazing indicator. Why? Because it basically colors and tells you the trend based on the color of the candles. So it's a little advanced, but not deeply. All right. So my color scheme: blue just means bullish, green means down. Market's been bullish, so you pretty much are seeing a ton of blue candles. All right, and a whole bunch of bounces off this 20 period moving average, or 21. Sometimes we go a little bit through it, but just basically bouncing off this trend line. COVID pierced the trend line and popped right back up. So we're going to talk about September of last year, which I want to mark off. I want you to see September really clearly. September and October, people fear. Everybody's predicting, when is a correction going to happen? When is it coming? What's going to happen? When is it going to feel like? Should I just wait? Should I be in all cash in September? Should I get out of all my trades and just kind of have some money, in case things kind of drop? Should I sit on hand? Should I not do anything? Should I just wait till we, just kind of kick it, hang out, do something else September and October and then hit the market back in November? A couple different options. But let's talk about facts. Let's stop predicting and literally talk about facts. So I love doing historical, quick little analyses to go back and look at what actually happened, because there's a lot you can pull just from last year. Once again, I'm in a group, Insider Trading, that me and my cousin founded, started 10 years ago, got 18,000 people in it, right? We've helped a ton of people make a lot of money over the last 18 months. A lot of people have made money from all the education, all the posts, from literally what we've created. So I want to go back to September. So first, I'm going to go here. Let's put a line in the sand. This is where September started. All right. And I want you to note something very, very simple. September was tough, but all it really was, you got to see these things for what they are. All September really was a pause. It was just a pause. That's it. Just slowed down, If you look at the previous months, this was the COVID hitting that low, that bottom, right? So S&P April, strong month. All right. Next month, May, pretty good. So April, May, June. June got a little tough, but still pushed back up. July, August, right? We had gotten back to those highs, back to that same finally got back to where we were pre-COVID, right? This was the high pre-COVID. So that was kind of line in the sand. When can we get back there? That's where the market would be fully recovered, right? So we recovered in August. Phew, we got back to the high. We got back up. Okay, cool. So all of that COVID that we thought was going to be so terribly bad, we got back to the highs. Great. But September and October historically are tough months. Last year they wiped out a lot. They hurt a lot of people. A lot of newbie traders. And newbie ain't a disrespectful word. We say it all the time in insider trading, so this is just my lingo. A lot of newbie traders just didn't really know what to do. And once you've experienced month after month after month after month of the S&P of the broad market going up, 80% of stocks are correlated to move with it, right? So when you experience that, it kind of can trick you. You can kind of, do a little okey doke. You know what I'm saying? It doesn't prepare you. It kind of gets you, you can very easily forget that markets come down and that 15, 20% corrections are normal. They're cyclical. They happen. It's inevitable. It ain't a question of if it's going to happen. Yeah, I get that people are questioning when it's going to happen, but there's a really simple way to kind of know. So I'm going to just keep going. So here's September. The main thing to note about September is the market loves to test highs and lows, highs and lows, highs and lows. We got stuck in September. So yeah, we pulled down. And this is October. October, we tried to push up. We came back down. I'm going to go to the week chart and show you this in a little bit different detail. When did we finally just get out of this tough, ugly range that we were in? Most people don't realize that ranges are like really simple, right? The problem is we only experience them because most of y'all are so used to looking at day charts all day. So let me do that for a second. Let me go to the day chart. And let me go to Apple. And let me get rid of all of this stuff for a second. All right, if we look at Apple, then Apple right in here pretty much has been stuck in a range. Strong bullish move up, bounced off this 200 period moving average, and then we ranged. All right, today is, what is today? September 1st. We finally got out, strongly broke out of this range. All right, and then we pierced it today. Tried to go a little bit higher, got up to 155. But this is just the range. It's just the range. It happens. Had a little range back here too. All right. Pushed up, ranged. Tried to get higher, couldn't go higher. Fell back to the 200. Took some time, reloaded. Market pushed again, strong bullish move, and we ranged. All right. That range is often the flag for a bullish flag pattern. Oh, Tesla. Let me get rid of all of this stuff. Tesla did the same thing. Look it up. Look at this range. Bounced off the 200 August 2nd for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We were stuck inside of this one candle. And then we pulled back to the 20. And now we pushed back up, finally got right higher than this 730. So what's my point? The best stocks in the world range. Everything can range. Ranges are normal. They're very normal. Very normal. The problem is when we range on the month chart and you don't know to look at the month chart, you don't realize that what seems to be a really volatile, tough market really isn't. It's literally just a month or two of the market ranging. All right. So this is called top-down analysis. You got to start with the S&P and Nasdaq. Start with one. Like, learn how to really, really just analyze these broad market indexes that we literally will talk about every single day for the rest of your life and beyond your life until we create something better. These are going to be where every single analyst on every financial show for the rest of our lives starts their analysis. You won't see a financial show that's going to talk about the market and not talk about the Dow, S&P, Russell 2000, Nasdaq, and really S&P and Nasdaq. So we're clear that we just had a range. Okay, cool. So why do so many people suffer? Because they didn't know, man. They probably didn't know about September and October. That's part of it. So I'm educating you there. But then what I also want to do is this. Now I want to change the time frame. I want to go from the month. I want to go down, get a little bit more detail. And I ain't going to jump to the day charts. I want to go to the week. All you really need to do is go to the week to see this a little bit clearer. A little bit clearer. So what do you see? What do you see? What I see What I see is this. This was the range. That was that high. Weeks and weeks and weeks of buying. Pull back. A little pump. Pull back again. Tried to kind of shake those people out. We love to do that. We love to do that move where you like, oh, I'm about to make money, and then the market just collapses and comes right back. And it's really just to shake you out. And then it goes right back up. Happens all the time. Kills day traders. Is what makes day trading so hard. If you can't withstand shakeouts, right? And this honestly takes some advanced thinking and skills to be able to not get shaken out of these moves, right? The market loves to get you out just to pop right back up, right? So here's what I do want to say. From these highs, here's what you need to ask when you do this type of analysis, going back, looking at historical patterns, right? Because for me, this is like child simple, right? Child simple. So the first thing I'm going to do is I want to look at how deep was this pullback? How deep was this pullback? That was about 11%. 11%. PB is pullback. That's another 11% pullback. This is on the S&P. So here's the thing. Your stocks, every stock has a beta coefficient. Yahoo Finance, if you go to Yahoo Finance to keep it simple, they give you the 5-year beta. What does that mean? It's the 5 years of measurement of price fluctuation to basically compare that specific stock to the S&P. Right. So you need to probably sign up, take a class with me, learn a little bit more. I can't like teach every single thing in this video, but to keep it simple, beta's like the speed, right? It's literally like what I teach my kids. I'm like, it's the speed. You need to know how fast your stock moves. There's a difference between renting or trying to drive a a car that is max, the RPMs. It really is. It's not designed to give you, the horsepower in it is 150 horsepower. It's different from driving someone 150 horsepower than driving someone 550 horsepower. The speed is different. The skill needed to drive a basic car versus a racing car type engine. It's a different skill set, right? So there's a difference also with the speed of how fast a stock's price can fluctuate. Some stocks are really safe. They're slow. They got a low beta, 1 to 1.5. I think that's a sweet spot for most newbies, right? Anything above 1.5, you're getting into a type of stock that you really, really, really need to be skilled. Why? Because a stock like Tesla, for example, it has a 1.9, just say 2.0 beta. It's 200% or twice as volatile as the S&P. What does that mean? That means if the S&P on a little humble pulls back to this 20 and drops 11%, Tesla can do that times 2. It can pull back 22% real easy. And these numbers are just to guide you. So that means it can pull back 30% real easy. Are you ready for a 30% pullback? I don't know. It's about skills. Do you have the skills to manage it? I don't know. If you trade one of these weed stocks, hoping for a big, out the ball game type of trade, okay, I get it. But if that beta's 2.5, you got to be ready for a 40, 50%, 60% pullback. All right. So let me hop over to Nasdaq for a second. I did some analysis on this earlier, clearly. Actually, I went through most of this with my membership program today. So I figured it'd just be kind of easy to basically regurgitate it, for my YouTube audience. As I'm working on, just teaching more and putting more of this stuff out there because I know my approach to the market is amazing. I know that. And it's simple. Yeah, once again, I teach kids, teach adults, all levels, advanced traders, basic newbie investing, it's kind of 4 levels to trading. The stuff we talking about right now really is like level 2. Because it's not deep stuff, but it's just really the beginning foundation of the type of analysis you need to always be able to do. All right, so this is Nasdaq. This is that same range. Let me go back for a second to the month. All right, so here's that month on Nasdaq. All right, September, October was down, pushed above, finally got November, we got above, and then check this out. Even March of this year, what happened? Strong pullback, but all we did was pull back to these highs. What used to be resistance was now support. So you should have even known that. Right, you should have known that, but you probably didn't. So that's cool. So I'm gonna go back to the week chart, and then what we're gonna do is I want to essentially look at, and I want you to think about, well, how much did Nasdaq drop? That's all we're looking at. Nasdaq, a little bit different than S&P, right? A little bit more focused, less sectors. It's about 100 stocks. When we talk about QQQ, Nasdaq 100, it's 100 stocks, right? So less exposure, right? Less stocks, but in terms of performance, I prefer Nasdaq because it literally just performs better. Last 10 years, it's averaging a 7% higher return annually. That adds up very fast when we start talking about compounding interest, right? So this pullback right here, 14.5%. And then it pushed up 15%. And then we dropped again, just trying to shake these people out, dropped about 11%. But from the high of this month to the low, 15% pullback. 15% pullback. So why is that so critical for me to know? It's critical for you to know too. And the other critical thing that I hope you have paid attention to without me even saying it is this. Where did we pull back to? All we did was pull back. Here we got close, didn't touch it. We got close to the 21, and here we pull back to the 21. It's classic foundational support. I see folks drawing Fibonacci lines, retracements, using extensions, trying to predict where stuff is going. Y'all got a million different indicators trying to predict where the pullbacks are going to be. It's so complicated and convoluted. Just use the 21. Why? I'm going to show you why real quick. This for free. I wasn't even supposed to be doing all this, but I'm going to do it real quick. Look at Nasdaq. After we came out the recession, we got enough of these blue candles. Market went bullish, right? Bounce off the 20. Uptrend. Piercing the 20. Uptrend. Bounced off the 20. Uptrend. Still here, even this month, which was August of, look at that, August going right into September. August of 2015, tough month. All right, September was ugly. October actually pushed up of 2015, but all we was doing was bouncing off this 20. It held as support. Tough month here. When was that? That was December. This month right here, that was October of 2018. It was ugly. All we did was pull down to the 20. 1 month below, and then we popped right back above it, bounced off the 20. All right, and then COVID, all COVID was another deep push back to this bottom, to this trend line, this long-term trend line. And then we pretty much shot right back up. So we tested that too. We tested the 20 again. 20s are so foundational. Why? Because on any time frame, it's roughly going to be the mean. And there's this statistical concept called a regression to the mean. All it means is stuff loves to pull back to the mean, to the average. All price does on anything, all price fundamentally is doing is moving away from the average. And at some point, it comes back to the average. If we looked at something in a downtrend, I can't even think of a stock in a downtrend right now. What the hell is in a downtrend? Some got to be in a downtrend. Let me see. What was down today? I'm going to go to indices real quick. Go to our little heat map, Okay. So I was just looking for the brightest red. All right. So here we go. AMC. AMC was down today. So let me go to AMC real quick. And I'm going to go to a 15-minute chart. Down. Look at that. Down all day today, right? So AMC was down. Dang, I forgot why I was even looking for a downtrend. Why the hell was I looking for a downtrend? Because we were under the 20. Under the 20. And look at that. This downtrend started pre-market. And then look at that. We went under it, closed under it for a couple bars. We pushed up, and now the 20 is resistance. So the 20 fundamentally is support or resistance. Just depends. And even though we were down pre-market, all right, we pushed up, we tested it again, and collapsed down. So that's why the 20s are key. That's all I'm gonna show you. I'm gonna come back to this week chart. So here we go. This was the bounce from COVID. Bullish uptrend, pull back to the 20. So here's the thing. If you expected the market to pull back, right? For me, I don't give a damn what it is. I don't care what it is. If there's a pullback coming, if we've just experienced what I call a volatility squeeze, these profit windows, when markets just go straight up, right? We just higher high, small pullback, higher high, going higher, higher, right? This is where you make money. These pullbacks are where you get in. But how do you know when to get out? I can't explain everything to you in this class. I mean, in this training. But once again, these pullbacks to the 20 are just cyclical. They happen. If you ask me, if something's high and you like, where is it going to come down to? I'm going to say the 20. And that's not me. That's not like my own genius or some special indicator. It's math. It's statistics. It's just math. Like, you got to realize, like, when you're looking at a chart, you're literally just looking at math. So you probably should like a little bit of math, just a little bit of math, or at least understand that these indicators are based on mathematical principles, right? I ain't go to school to get an MBA. I ain't pay to get no $80,000 MBA to not understand math with business, with trading. It's all correlated. You got to know your numbers. If you're a business owner, if you run a business, if you run a household, if you're human, if you spend money, you should know how, you gotta dig in here and know something about some numbers. So what can you see? This was a nice bounce, right? We went a little bit lower, you know, in the month chart, right? This is where I was saying we were hitting these highs. It was resistance. These 2 weeks we were like, oh, are we going to go higher? Yes, we went higher. What did we do? Pull back to the 20, which was really a pullback to this area, which was that same old high. Right. Then what happened? Push back to new highs, and then what happened? Oh, back to the 20 again. All the pullbacks are to the 20. It's so many stocks where all the pullbacks are to the 20. It's ridiculous. So now we got enough information to say what? Okay, let's say September is a tough month. We already know we had a 15% pullback the last time. So what does a 15% pullback look like here? Very simple. From where we are today, from this high, if this month it does what it did last year and we get a 15%, well, let's do this. Let's start here. If we pull back to the 20, how much is that? That's about 8%. Okay, so you know we can pull back to the 20, but that's not 15%. So if we drop 15%, what does that look like? Well, 15% is all the way down here. 15% is down there. Okay. Now we got some information. All right. So I'm going to add one little tool that I love, but I don't always like to throw on here just because, it will require me to teach a little bit more than I kind of signed up for in this, this free tutorial. But Bollinger Bands. I love Bollinger Bands. They work perfectly, and then they also terribly work or don't work. Right. So if you ever become a student of mine, take some of my more advanced classes, I can teach you exactly when they do and don't work and why. It's all math. Very predictable stuff. I use Bollinger Bands literally every single day on everything I do. If I'm day trading futures, I got bands. Long term, I got bands. Swing trading stocks, I got my bands. But once again, there's a time when you need them and a time when you don't. So here's a funny thing. If we pull back 7%, we're coming to the 20. So I already told you where we're coming to. And for a second, imagine all you do is, imagine we're talking about Nasdaq, QQQ from an options perspective, right? And imagine we're talking about it as an options trader who wants to literally make money from trading Nasdaq, right? Once again, it's also going to be a great barometer because it's going to help you with your long-term stuff. You need to understand what the broad market is doing. They talk about it every day. We talked about that already. But once again, I want you to think for a second like you really love Nasdaq because you've been killing it, making money as an options trader, trading Nasdaq. So if we get a 7% pullback, you already know where it's going. Well, you already know where we would be pulling back to. All right. So a light correction, which really ain't a correction. This is just normal cyclical stuff, right? 7% pullback is right there. 15% pullback right there at that bottom Bollinger Band, which is why I love them. All right. So we've already pinpointed if the market does what it did, you already know where it's going. It's going to come down to this 20 and bounce. if we get the type of correction we had last time, we're going to get a little stronger correction. It's going to pull back here. What if it goes beyond that, though? Here's the funny thing. If I extend this line right here, if I extend this and bring it all the way across, because old support is still support. Like, a lot of y'all be, doing analysis, and it's like, don't draw something and go through the work of doing the analysis and then take it off your chart. These old, areas still matter. So if I go all the way down here, what is that? That's basically a 20% drop. Why is that important? Because if we get a correction, it's going to go to one or all three of these. And these are classic foundational places you should understand. Why? Because if we did a 7% pullback, your entry's on the 20. You don't have to buy at the 20, though. You can give it some room. You could be patient, but I want you to know that that's possible. If we do what we did last time, we get a 15% correction. All we're going to do is pull back to this bottom band. All right, so you got an entry there. If it's stronger, if it's a little stronger, and there's different ways. Once again, I can't do it like a full 7-hour class right now. But if we get down there, right, and each week candle goes lower, and then the next week goes lower, and next week goes lower, right? 15% is there. But what happens if we come down here to this 20? Here's the genius insight. Here's what nobody's teaching. I'm gonna give you this gem, and then we done. If I go to the month chart and I look at where the 20 is on the month, then guess what? The 20% pullback that Nasdaq may experience, all it's doing, it would be coming down to test the 20. Interesting, right? So, you got that? 15% pullback. All right. Has not hit the 20 in a minute. Month chart hasn't hit the 20 in a minute. It's inevitable. We're going to hit it at some point. I could go all the way back to the recession again. Bounced off the 20. Deepest pullback. Bounced off the 20. Bounced off the 20. Strong right here. All it really did, though, we went through the 20, came down to the bottom band, popped right back up. Strong test here. Bounced off the 20 up. Went a little bit lower this month. COVID here went straight through the 20. All it did was come down to this bottom band to bounce off of support, this old trend line. So if we get a 20% pullback, where are we going? You already know where we're going. We just pulling back to the 20, which is normal. It's cyclical. It happens. It's going to pull back to the 20 at some point. So I can't tell you when it's going to happen. But the other thing that I can tell you that gives you a little bit of guidance too is, here's the thing. To get a pullback, we need something to close lower. All right, you need the market to actually go down, to close lower. What do I mean when I say that? So let's look really quick at let me see. Let's look at Tesla. Tesla made this really, really beautiful move a while back. All right, this was this move right here. This really, really crazy move. This was last November all the way up to January. This is what you want. This is easy money. Why? Because every week we just go higher. Every week we go higher. And what I want you to think about, and whatever stocks you're tracking and looking at, how do you know something's coming down? It's very simple. Go to the week chart, a little bit better than the day, and just put a line, put a box under the week that made the high. All right, so at some point, this was the highest week. Okay, cool. When are we coming down? I don't know. The next week went higher. The next week went higher. Eventually, we're going to start breaking these lows, and that's when the market is coming down. Oh, shoot, look at that. Next three weeks, we keep going higher. The lows keep going higher. Psh. Oh, my goodness, look at that week. Who knew? Who would have known? Who would have known? Look at that. When are we going to come down? Ranging inside this candle. Couple different ways to play it. When you start to see that range, though, this was a nice pullback. It might have been like, I don't know. Probably need to bring this up a little bit. Just be a little conservative when we crack this low. This was the strongest down week out of all of these. This was the first week that said, yeah, this market might be losing steam. And we broke the highs and we dropped. All right. So we made this week. Everybody's hoping we go higher. We pierced it. We went higher and then we faded. Not a good sign. We stayed inside of that week candle for 1, 2, 3 weeks. And pretty much once we came back down here, that's when it was over. And then you had these 2 really, really ugly weeks. Right. So if I go back to Nasdaq real quick, we're up. We're up. This weeks have been going. Look at these lows. All these lows higher, like right here. Tested us a little bit. Came down, a little pop. Pushed it up higher again. Right. So we're not coming down until we actually come down. I get that everybody's predicting a correction, but you got to know how to read price action. We will come down when we come down. And that's when we coming down. Not before, not below. I mean, not before, not, we come down when we come down. What's important, though, is do you even know where we going to come down to? All of this stuff is cyclical. We're going to come down to the 20 when we start that process of breaking these lows. When you get that first week where we close lower, whether that's next week, this week, I'd be surprised if it's this week. Let's say this week. We just have a crazy Friday. We come all the way down to 366 and it's lower than this candle. Guess what? As soon as you see that, you already know that's the beginning. We starting to come down. Starting to come down. 20 bottom Bollinger Band once again down here. That 20%. I guess I took it off. That 20% pullback is just the 20 on the 20 on a month chart. That's all it is. That's all it is. 20 on a month chart. Oh, I'm trying to get rid of this thing. 20 on a month chart. That's all it is. So, and then for fun, let's do one last thing. What did Apple do last September? So this is what Apple did last September. You're not going to like this, but this was September. It took Apple almost a year to break out of September. That's rough. But you need to know that. You need to know that that can happen, right? Where was September? This is Tesla. September was here. All right, so we had this month. All right. Only took 2 months to break out, so closer to the broad market. Nasdaq, it only took 2 months. We were out of that breaking out by November. Same thing with Nasdaq. Some stocks ain't gonna break out that fast. Tesla's more volatile. Tesla has a higher beta. I'm giving you all the basic keys to figure this stuff out. All right, these are basics, but they also advanced too. Because with options, we talking about a lot of money. All right. What else could I look at real quick? I don't want to look at Microsoft. It's too solid. What's something else everybody loves? Let's look at Facebook. What happened to Facebook? September, right there. I can almost identify September without even literally just from looking at the chart. So check that out. So Facebook got stuck in September, and it took 1, 2, 3, 4, 5, 6, 7, 8 months before we broke out. 8 months. Amazon, where was September on Amazon? September was up here. We literally we still ain't broke out of September of last year. We've been ranging in Amazon for a whole freaking year. Whole year. Super long bullish flag. Why do I call it a flag? Because the flag, for those of y'all who don't know the pattern, it's like when you get a pole, which is just a really strong uptrend, and then the market goes sideways. That's a flag. Bullish flag. What generally happens? We bounce off these lows. Once we close above this high, see how we pierced it and came right back in? If we can close above and stay above, then usually we just start a new uptrend. We just go higher. So that's it. Hopefully this has helped. If not, I don't really know what to tell you. These are core basic fundamentals you need to know and master to really, really do well in the markets. And I mean do well years beyond COVID. Because here's the ugly truth: there's millions of people who got into trading because of COVID, because of the pandemic, who've made a little bit of money or a lot of money or whatever, who are not going to be trading a year from now, 2 years from now, 3 years from now. This is not a hobby, right? If you really love your family, love yourself, you want to use this market to make money, whether that's like full time or just some extra cash. I don't care what it is. It could be $1 a day, 1,000 a day, 10,000 a day, whatever your goal is. You got to take this seriously. You got to dig in. And if you need education, you got to get really educated by people who know their stuff. It's a ton of educators out here who literally can't even speak to the math that fundamentally is working behind all of this stuff that we use. That's all technical analysis is. It's visual math. That's all it is. All right. I love statistics. I got A's in statistics. I'm bragging a little bit now. I do love statistics. Bollinger Bands are based on standard deviation. That's a statistical concept. This 20-period moving average, that pullback, that's a statistical phenomenon. A regression to the mean is what it's called. So don't panic. I don't want you to worry. You shouldn't be all crazy, panicking about the next correction. You just need to know where the market can go, what to recognize to know it's about to come down. And you really got to decide, are you going to try to play it as a somebody who's, short in the market? Are you going to be bearish of it? Or are you going to kind of, just be ready in terms of your capital and money management strategies, to really just be able to get in? Because if you think about it, let me go back to Nasdaq real quick. I'm going to go to that week chart. Think about if you did this. Think about if all you knew to do last year, you got out of some positions just to free up some cash. Because these are technically months that can be tough. And all you did was yo, I'm going to at least, right, that 15%. You could have drew the same line and been like, where's 15%? Right? Even if you was like, you know what, I'm not just going to randomly buy 15%, but here's what I'm going to do. You could have even did this simple stuff. You could have said, you know what? This week went lower, this week went lower, this week went lower. I'm going to put a box around the low. And I'm going to just buy when we get above that week. The very next week, we bought. All right, pushed. Okay, cool. Came back inside that week, tried to test it. Did we ever go lower than this 1 week? No, we never went lower. All right. So we broke out. We came back to test it once again, That's just a shakeout. And really, all we were doing was coming back down to this 20 because we didn't hit it here. We got close. We didn't actually touch it. Market loves to hit this 20. Imagine buying here. Imagine buying your options contracts for Nasdaq here at a price of 270. As soon as you bought, like at 270, by the end of that week, we were at 295. Right? So imagine you had little cheap weeklies. That was a great week. But imagine you gave it a couple months. Look at that. Got back to the high. Two weeks of a little bit of struggle, and then we got to new highs. All right. All you had to do was buy at the 20. So, once again, 7% pullback, 20, 15% pullback, bottom Bollinger Band. If it gets a little crazy and wild this fall, don't trip. All it's doing is going to the 20 on a month. And even that is cyclical, predictable, and an inevitable pullback. So, if you need more help, if you enjoyed this training, man, I would definitely love to have, I'd love to have you in a class, a live workshop. I do a lot. Go to limitlessclass.com. I'm going to put that, of course, you know how it is on YouTube. I'm going to put that in the bio, down in the comments. Hopefully you have enjoyed this. And it's just giving you some perspective on where you should be looking to actually think about buying, These 20s are golden. This 20 is only a 7% pullback, though. So I wouldn't be surprised if we come down and go lower. Honestly, I really won't be surprised at all if we come down 20%. Because nobody's expecting it, per se. And once again, I'm going to leave you with this. On the month chart, all that is a pullback to the 20. Happens all the time. So, Limitless Class is where you can sign up for consults, a one-on-one if you need some personal help. Love to do that, to dig in, look at your portfolio, see what you got, We can talk specifically individual charts. You know, we can talk technical indicators. This is probably not too much I can't help with, honestly. Got courses, a course for kids. If you got middle school or high school kids, you want to get, you want to start getting them on point early. Wealth is key to start teaching them early. And then, of course, I got a membership program that's really dope. We do weekly trainings, about 30 plus hours of content. It's only $60 a month. Amazing price, amazing value. Got a really dope options course. Two really cool options courses that are powerful. Over 20 hours of content in one. The other is kind of like a 5-hour, really fast deep dive. Take the options for income course first, and then if you love futures, you just kind of expand and you like, man, I want to learn how to trade futures too. A lot of these same concepts I taught in this training are in my futures class, but you, of course, got to be a bit more technical, a bit sharper, faster. You know, it's a different league. Yeah, futures is a different ball game. It ain't options. Options is easier money, way easier money. All right. And I actually believe every adult in this country needs to know how to trade options. I don't care who you are, what you do. You need to at least get to level 3, which is options trading. And you don't have to get crazy, super advanced, but I do think the deeper you go, if you can get the right foundation, options is just, it don't make sense. It don't make sense to not be able to trade options. I don't care who you are. If you're over 21, you better learn how to trade options, period. I think it's part of being an adult in this economy. So that's my spiel. I'm out. Thanks for watching. Once again, this is Noble. And come back to the channel, man. I got a lot more that I will be pushing and putting out. I appreciate you for watching. Share this video if you love it, if you got some really good gems from it. And come back. Subscribe. As always, subscribe. Talk to you later. Thanks for watching. Peace.